Oil continues to rise and jump due to Chinese exports and production cuts, coinciding with the start of the economic life in the United States of America. A positive expectation about news of U.S. oil stocks. Gold is continuing its bullish path at the beginning of the week, in light of the worst news of the U.S. employment data last April, and expectations of the rise of gold to $1,965. The US dollar index is targeting levels above 100, as the dollar received more support against the backdrop of collapses in West Texas. Contracts fell for the first time to negative levels, which also supported the demand of U.S. bonds. An expected deterioration in the U.S. employment data and investing in financial markets from the U.S. currency. A member of the Federal Reserve Board of Governors, Tom Parkin, expects the recovery of the American economy to be slower than many expect, to resume the rise from the current levels of performance shown at the present time. Italy suffers from an economic shock due to the coronavirus and its investment-grade rating risk, and needs the European Union's assistance to get out of its current negative rating. The European Union needs at least €1.6 trillion as an economic support package to recover from the coronavirus crisis. And the Italian service sector is contracting at its fastest pace in more than 22 years. Bank of England warns of the worst recession in the British economy ever seen in the country 300 years ago, and expectations of a contraction of the economy by 25% in the second quarter of 2020 due to the coronavirus pandemic.